All right, well, hi everybody. My name is Emerson and I'm the co-founder and CEO of Gigacover. Our one-line tagline is, we're building financial benefits for the gig economy. So I'll start by saying, in the next 5 minutes, I'll show you that, we are the leading category business for the gig economy benefits, right, in Southeast Asia. I think this category is being defined. There are many conversations going on, starting with the conversations in the US, Uber, Lyft, and so on, but also reaching, Southeast Asia. Now, work is changing. I think we all agree that the self-employed economy, and this includes gig workers, this includes self-employed professionals, freelancers, so blue collar and white collar. This grew 30% annually from 2015 to 2019. And I believe it continues to grow, and even more so possibly post-pandemic. Now, self-employment is already large in Southeast Asia. 25% and 60% of the population, the working population, is self-employed, right, what they call the informal sector. And they're proliferating. More work is being done on platforms. More work is being done because they have access to good internet and mobile phones. Now, at the same time, post-pandemic, a lot more enterprises want a hybrid workforce. Right, they want to use a proportion of employed labor, but also self-employed contingent labor. Right, so this is all pushing that shift of work. Now, what we've noticed, what we've learned, is that 50% of this workforce is underbanked and underprotected. Right, so we're working with the rising middle income gig worker, right, more blue collar, freelance or self-employed, more white collar. Roughly, 25 to 40 years old, so slightly on the younger side, middle to lower income. Right, they do occupations like they drive, ride-hailing, deliver for logistics, but they also do slightly higher skilled work like caregiving for the elderly, or even teaching online. But they all face the same set of problems, which is because of their fluctuating incomes and the nature of their work shifts from employer to employer or platform to platform. Their access to cash and credit is low. Right? If they will apply for a credit card, I think most would be rejected, or most will need a much longer history of stable income or have to suffer a haircut on their income when it comes to getting a line of credit on a credit card. At the same time, because insurance penetration levels are just low in Southeast Asia in general, what you see is they're also underprotected. Right? So Gigacover plans to solve both of these problems. So what we do as a business is we offer flexible benefits that reduce the financial risk for the gig economy. We partner insurers, peer-to-peer lenders, financial institutions in general to co-create products. So at this point, we are not taking on balance sheet risks. Our insurance products are backed by licensed insurers. And for our credit-related products, we have a backstop, a line of credit that we work with. So what are some of the products we have? Two categories. One deals with cash flow and the other deals with protection. I think these two reduce the risk financially for a lot of the workers we work with. So over on the cash flow side, what we offer are earnings advances. So imagine you're a freelancer or a gig worker. You may have your earnings tied up in the platform or sales commissions that are only due payable to you 30 days, 60 days. Right? So what we can do is that we can advance you the money and then collect it back from the group, the business, right, at the regular payroll or regular payment cycle. So it's sort of like an invoice factoring, but for individuals. Individuals in this case pretty much are their own businesses. We also offer earnings protection, right? This is a kind of insurance product that pays out if you're unable to work, either due to medical leave or due to hospitalization leave. And on the protection side, we have insurance products underwritten by licensed insurers, micro versions of them, right size for this population, such as hospital cash, which pays out a day of income or cash if you're in the hospital, critical illness or life and health, and also specific to certain segments, we have what we call supplementary insurances, and in this case, one of our best-selling ones is the motor excess reduction product that we're running in Singapore. All right, so this is kind of like our suite of products that we have that we hope or that we've seen reduce risk for our customers. Now, how do we acquire workers? We are currently adopting a B2B2C, or rather B2B2W approach, where W stands for the worker, right? So I go to a business and I try to acquire their workers, their freelance gig workers, right, onto our Gigacover platform. And our pitch is quite simple, right? Businesses are looking for ways to secure their supply of labor to meet the demands of jobs. This can be across ride-hailing, logistics, caregiving, tutors, anything, right? Because they're not employed, they're not like loyal or required to stay with a certain platform, right? They move around as and when they wish. So if you want security in your labor supply, right, we provide a benefits program that helps to attract and reduce the churn of the workers. Now, in return, then Gigacover gets access to a pretty large user base at a fairly low customer acquisition cost, right? And that's how it's been growing so far.
Emerson, we are over time now. Please try to wrap up quickly.
Okay, sorry about that. So we're now at 90,000 users, doing about 70,000 in monthly revenue. As you can see, we work across 100 businesses in Singapore and Indo of different sizes, and we achieved a 9x year-to-year growth last year. Now, I would say in Singapore, we're market leaders. We work with more than half the platforms and work with more than 17% of users. We have statistics here around the kind of gross written premiums we are enabling, and also the kind of amount of money we are advancing to improve the cash flow of our users. So I think in general, this slide is to paint sort of the TAM and the trend of how we plan to acquire and grow. Starting really quickly with our current strategy, B2B2C, but moving on into going direct and going to tier 2 cities and tier 3 cities in Southeast Asia, growing from protection and cash flow into credit, bill payments, savings plans, and hopefully in the long run, become a platform, kind of like a super app, financial platform for the gig workers. Yeah, that's all I have. Thank you for your time.
Thank you. Thank you very much. Let's move to the questions from the judges. Can you clarify a bit who, like when you say you're B2B2C, the 2B partners, are you saying that you approach Grab, you approach Gojek, or you have other ways to get directly at the workers?
Right, so the B in the middle is any labor aggregator. So we've worked with, yes, Gojek in Singapore. We've worked with names like Sampingan in Indonesia, Ritasi, Lala Move. We've also worked with real estate agencies like Orange Tea and Ray White. So anywhere where a large number of freelance or gig workers would be present, that is our method of acquisition.
Do you have any retention data so far that you can use to evaluate? So once these workers, are they typically, long-term customers, or do you anticipate that they'll come in and out?
Right, so we do have retention data. Now, I'll explain a bit about who is actually paying for these services. In the benefits program, typically it's a tiered structure. So workers on these platforms or these businesses, they either work a lot, right? They becomes a majority of their occupation, or they work less, or they work very casually. So the idea of the business is to supplement and subsidize some of the benefits for the top tier, right, to encourage the other tiers to move up. So both the business and the workers pay for our products, right? Some are subsidized, some are bought. Now, the nice thing about what we have is that these users become members of the Gigacover membership program. In many cases, we are the group policy holder, right? And our benefits are portable. So wherever they go, they can still continue to buy and pay for insurances or get the cash flow advances they need, independent of the platform they're with. Now, of course, if they're leaving a platform where they're subsidized, then they will have to make a decision. Do I want to continue to pay for it or just lose that coverage? Now, retention data is about, we lose about 3% of our customers on a monthly basis. And there are some customers that drop off but come back, right, depending on the situation and depending on the effectiveness of our marketing programs.
Do your insurance premiums change across verticals? So let's say Grab versus, I don't know, like the Deliveroo of Southeast Asia.
Right. So the answer is the premiums do change over time, but not for individual verticals. We offer a blended program based on the blended occupation and blended ages of whoever is in our portfolio of risk. So yes, if Gojek is a large customer, they could influence that risk pool significantly. But we have diversified into logistics, delivery, caregiving, tutors, many other occupations, and it helps us keep a fairly healthy loss ratio of about 66% so far.
Right, and do you guys have access to the internal data of Gojek and Grab when they subscribe for your service?
Yes, so as part of the onboarding process and part of the underwriting process, of course, we try to keep it as simple as possible for underwriting and onboarding to be fast. But we do collect information like, of course, the age, some identifiable information like the NRIC or the national ID, email, phone number. And we also collect underwriting data like age, income, job history on the platform, any previous claims from any other insurance policies in the past on that platform. So we do have a little bit of that data that we can work with. Now, in addition, as the users interact with our products, right? Are they topping up micro-insurances? Are they adding their family members? Do they make claims? Do they take advances? Yeah, that's data that's proprietary to us that even the platforms won't have. And this is all very, very valuable to the insurers we work with or the banking partners we work with.
So are you able to effectively pool the risk across these platforms then?
Yes, that's exactly what we're doing. Yeah, that's exactly right. So not just across platforms, but we also try to do it across ages and also across groups.
Can you comment about sort of the competitive landscape and how proprietary your technology is?
Yes, let me talk about technology first. So our technology falls into two parts. One is the ease of administering the products that we've co-created. So whatever we've worked with the insurers or the financing partners is not available in retail. And that's because it's right size, it's smaller, it has to be digitally administered end to end. So with the supply partners, we have a fairly strong integrations into maybe not their direct backends, but to a sandbox area that they then work with, right? So that's proprietary to us. Now on the front end, facing the clients, as much as we can, we prefer to integrate with their systems as well. So that onboarding the users, the workers who come on board, as they move from tiers to tiers, that could be automated so that the correct benefits are given as they move through the system. Now, not all clients have tech, right? So in some cases, they just use a dashboard to be able to update the system. But as far as we want, yes, that would be an integration we can build. Some other technology we do with the backend is we can process level 1 claims by assessing some of the risk signals that we get. So anything less than $500 as a claim, we can approve or reject. Sorry, there was a question?
Okay, thank you very much. Now we are actually at the end of the time. We will move you to a breakout room where you will have a chance to talk to one of our colleagues, and then we will have the next startup very soon. Thank you very much.
Okay, yeah, thanks everyone.